Peter Brandt, one of the greatest living traders, a man who has not only survived but consistently thrived in the financial markets for 50 years, from 1975 to today. In an industry where most traders disappear within a few years, his longevity alone is extraordinary. But what truly shocks people is this. Brandt recorded an 18-year stretch with a verified, audited average annual return of around 40%. These aren't hypothetical numbers or marketing claims, they're audited results. To someone new to trading, 40% per year might not sound legendary. Social media has conditioned many traders to believe that real success means making hundreds of percent a year, flipping a $1,000 account into $100,000 in a matter of months. But that's the fantasy version of trading. That's not how real, long-term success in the markets works. Real trading looks different. Real audited performance looks different. And real longevity, that tells a completely different story.
Just look at the math. Start with $10,000 and compound it at 40% a year. After 1 year, $14,000. After 5 years, $54,000. After 10 years, $290,000. After 20 years, $8.4 million. After 30 years, $242 million. After 40 years, $7 billion. Yes, billion with a B. This is the power of longevity, consistency, and risk management, not hot streaks. A successful trader isn't the one who makes 300% once. It's the one who can survive long enough to compound 20 to 40% year after year, while 99% of traders blow up. In today's video, we're going to break down two things. 1. How Peter Brandt's trading method allowed him to achieve decades of consistent 40% returns. And 2. How you can apply his principles to real markets. Let's begin.
Part 1. Peter Brandt's trading method. Brandt's approach isn't built on fancy indicators, algorithmic magic, or secret institutional tricks. In fact, his method is shockingly simple. He focuses on 3 core principles.
Principle number 1. Trade less, but selectively. Peter Brandt isn't interested in taking every setup that appears on a chart. In fact, he takes relatively few trades. Brandt only acts when the market forms classical chart patterns, the same patterns that have been recognized and studied for nearly a century, dating back to technical analysis texts from the 1930s. These include structures like head and shoulders, ascending and descending triangles, rectangles, flags and pennants, parabolic moves, horizontal bases, and other well-established formations. These patterns aren't new, and they're not proprietary. What makes Brandt different is the discipline to wait for them. He's known for saying most trades are not worth taking, and he means it. Brandt is willing to sit on his hands for weeks or even months until a chart develops exactly the conditions he's looking for. To him, a trade isn't merely an opportunity, it's a commitment. If a setup doesn't meet every requirement in his playbook, he walks away without hesitation. That patience, that willingness to wait for only the highest quality trades is one of his greatest edges.
Principle number 2. Cut losses fast, ride winners long. This principle is where Peter Brandt truly separates himself from the traders who don't make it. Before he ever enters a position, he defines exactly how much he's willing to lose, typically just 0.5% to 1% of his total account. That means if he's trading a $1 million account, his maximum loss on any single trade is only $5,000 to $10,000. There are no exceptions, no second guessing, and no negotiating with the market. Brandt has a famous line: "If your disposition cannot take losses in stride, save yourself frustration and quit now." He doesn't fear losses, he accepts them. To him, losses are simply the cost of doing business, the equivalent of paying rent to stay in the game. But when he does catch a trend, everything changes. Brandt holds. He doesn't scalp. He doesn't day trade. He's even said day trading is a sucker's bet. Instead, he trades as a swing and position trader, holding his setups for weeks, months, or even longer if the trend remains intact. This is how his best trades reach risk-reward ratios of 1 to 10, sometimes 1 to 20. His edge is brutally simple. Cut losers fast, but let winners grow as large as the market will allow.
Principle number 3. Ignore news, ignore predictions, trust price. Peter Brandt simply doesn't concern himself with earnings reports, analyst forecasts, GDP releases, CPI prints, FOMC meetings, or geopolitical headlines. And the reason is straightforward. As he puts it, everything known is already reflected in price. To Brandt, news isn't just noise. It's a source of bias. Imagine seeing a picture-perfect long setup only to read a negative article that plants doubt in your mind. You hesitate, skip the trade, and watch the market rally without you. That's the psychological trap he avoids. Instead of reacting to narratives or predictions, Brandt focuses entirely on how price behaves. He trusts the chart, not the commentary around it. News can offer information, but trading requires clarity, and clarity comes from price action, not opinions. This commitment to ignoring noise allows him to stay objective, disciplined, and aligned with what the market is actually doing.
Part 2. Applying Brandt's method in real markets. To see how Peter Brandt's principles play out in real time, let's look at a recent gold trade he executed. From late 2024 through April 2025, gold rallied nearly 35%, breaking decisively above its 21-day EMA. That move signaled a clear shift. The metal had finally exited its long consolidation phase and transitioned into a sustained uptrend. Brandt recognized this as structural change, the beginning of a potential major trend. After the sharp advance, gold moved into a tightening consolidation. The highs began drifting lower, the lows pushed higher, and price compressed into a narrowing range. This type of price action created a textbook bullish pennant, a classic continuation pattern. Then, in early October 2025, gold broke out cleanly above the pennant's upper boundary. Brandt entered around $3,470 per ounce, right as the breakout confirmed. No predictions, no narratives, just the pattern aligning with the trend. Over the following 30 trading sessions, gold climbed roughly 25%.
Key takeaway. Peter Brandt's success isn't built on secrets or some hidden formula. It's built on discipline, selectivity, and unwavering risk management. His entire approach can be distilled into 3 core principles. 1. Trade less, but only take the highest probability setups. 2. Cut losses fast and ride winners as long as the trend lasts. 3. Ignore news and predictions. Trust the price. There's nothing magical here. What sets Brandt apart is his mastery of the basics, applied with remarkable consistency over decades. That discipline, not complexity, is what makes him a trading legend. Here's the truth. Trading like Peter Brandt isn't hard in the way most people imagine. It's not about mastering 20 indicators, predicting the economy, or firing off dozens of trades a day. What Brandt does is simply different from what the majority of traders choose to do. What you really need is straightforward. Clear, structured rules, emotional discipline, and understanding of the story behind price patterns. And most importantly, the right trading mindset. To help you develop these skills, I built a complete trading course that walks you through everything step by step. Real strategies, real examples, real execution. This isn't theory for the sake of theory. It's practical, hands-on training designed for real market conditions. And as you can see on screen, the results speak for themselves. Students who apply the lessons consistently make profits. Many have passed prompt firm challenges, and others now trade funded accounts. Here's the good news. Today, you can get full access to the entire course for almost free. The only thing you pay is $25, a simple commitment fee, available through YouTube members. After YouTube takes its 30% and taxes take another chunk, I barely receive anything. But over time, I've learned something important. People don't value what costs them nothing. When something is free, most people don't follow through. But when they invest even a small amount, they take it seriously, and that's when real progress happens. Think about it. $25 is the price of a few Starbucks drinks, but the knowledge inside the course can save you years of frustration and tens, even hundreds of thousands of dollars in avoidable trading mistakes. I've opened the door. The only question now is this: are you willing to trade a few cups of coffee for the chance to transform your entire trading career? See you inside.